It is the end of the first full business and markets week in August, and we say a warm welcome to our viewers from all around the world. I am Melissa Enoch, and this is Your Money Moves.
Yes, it's another Thank God Friday to the start of the weekend. I am Grace Agbaragu, here at the FMTQ Archives.
Starting off with your news now, South Africa has taken a major step towards becoming a full sovereign member of the African Export-Import Bank, or Afreximbank. The government in Pretoria announced on Thursday that the plan has been approved by the cabinet. Membership of the $35 billion trade finance bank would give South Africa access to fresh trade and investment products, which is a timely boost as the country navigates a 30% tariff dispute with the United States. South Africa will obtain a Class A shareholding of Afreximbank. No time frame has been set for completing the extension process. Meanwhile, South Africa's central bank, Governor Lesetja Kganyago, presided over the bank's ordinary annual general meeting. The AGM reviews the operations and activities of the South African Reserve Bank for 2024 into 2025. The report presented by the SARB governor also features monetary policy measures delivered during the period under review, as well as other internal board and management issues. Let's take a listen.
We suffered high inflation during the global inflation surge of 2022 and 2023. However, inflation decelerated sharply in 2024. We have had space to ease rates because inflation has been well contained, with prices up 3% over the past 12 months. There have been notable risks to prices this year, such as the spike in oil prices after the bombing of Iran in June and the sharp depreciation of the rand back in April. But these risks have been resolved quite rapidly, and inflation has remained moderate. Looking ahead, inflation is expected to rise over the next few months. Food inflation has picked up, mainly because of meat prices. Fuel prices are also falling more slowly now compared to the recent past. However, we expect this uptick in headline inflation to be temporary, and we look forward to inflation coming back to around 3% over the medium term, which is at the bottom of our 3 to 6% target range. To the extent that inflation settles at 3% and the inflation expectations continue their move lower, the bank's forecasting model shows lower interest rates if inflation remains contained at current. We suffered high inflation.
In other news this Friday, the National Bank of Ethiopia has warned the business and the diaspora community over illegal foreign exchange market. The central bank says in a statement that the informal foreign exchange market must not be used as the country moves to stabilize its own financial system and curb illegal currency flows. The financial regulator says illegal FX operators face asset confiscation as Ethiopia looks to close loopholes that fuel black market trading and undermine official exchange rate policies. In a related development, the European Commission has updated its list of high-risk countries for anti-money laundering and counter-terrorism financing. News report says that the expanded list, which was published on Tuesday this week, has 4 African countries: Kenya, Algeria, Angola, Ivory Coast, and Namibia on the watch list. The others were Laos, Lebanon, Monaco, Nepal, and Venezuela. The designation means that the EU financial institutions must apply greater due diligence measures when dealing with customers and transactions that are linked to these countries. In Uganda, the central bank has approved updates on how the country's money is managed, from printing to distribution and beyond. The latest update was provided a few days ago by the Bank of Uganda's Director of Currency, Christine Alupo. Let's take some excerpts.
Clean, when central banks say this is a clean money policy, they're really talking about the standards of circulation, the standards of service to the public, that what to us represents fitness for circulation. When is a note fit or unfit? It is really capturing the the standard that we want Ugandans to be, the service we want to give Ugandans.
Yes.
So we don't want a situation where Ugandans are afraid to touch their money because, oh my goodness, it's too sticky, too dirty, too this and too that, you know. We want, of course, different denominations behave differently in circulation. We know, for example, that the 1,000 will reach the end of its useful life earlier than the 50,000 because of the nature of transactions it undertakes, because of the velocity of its circulation compared to others. So that's normal. But overall, we want you to have a convenient experience in using your cash. So that is what the clean money policy protects. And we share that with the commercial banks because they also do some recirculation.
Yes.
And it's all to serve the public interest in that regard.
Finally, on News Now this Friday, the United States has suspended all visa applications in Zimbabwe with immediate effect. The U.S. Embassy in Harare says on Thursday it has received instructions from Washington to pause consular operations except for those traveling on government or diplomatic business. However, Zimbabweans holding valid U.S. visas or permanent residency cards still travel, while those applying from outside Zimbabwe remain unaffected. This comes days after the U.S. imposed a refundable visa bond of $15,000 for Malawians and Zambians. I am Melissa Enoch, and that is your News Now. We have Grace standing by at the FMDQ archives room for our market rounds after the break. Stay tuned. Welcome back to Money Moves, and thank you all for staying with us. We now go over to Grace for our market rounds. Hello there, Grace.
Thank you, Melissa. Let me walk you through some of today's market data, starting with equities as usual. Coming up on your screen is a mixed picture across the continent. In Nigeria, the NGX All-Share Index lost 0.46% as profit-taking set in after recent gains. Over in Abidjan, the Beira OVM added 0.24%, building on Thursday's Independence Day rally. In East Africa, the Nairobi Securities Exchange gained 0.13%, supported by select banking stocks. Morocco's Maxi climbed 0.54%, while in South Africa, the GSE ticked up 0.07%, holding just above the 100,700 mark. In the Indian Ocean, the Mauritius MDEX gained 0.05%, and in Harare, Zimbabwe Stock Exchange slipped 0.30% to 203.32. That's the equities picture as of 14:09 GMT. Now to currencies. The South African rand was slightly weaker, down 0.12% to 17.71 to the dollar. The Egyptian pound was almost flat, off 0.01%, while the CFA franc slipped 0.39%. Over in East Africa, the Kenyan shilling edged down 0.05%, while the Moroccan dirham gained 0.14%. Here in Nigeria, the naira weakened 0.18%, closing at 1,531.14 in the official market. Let's switch into the commodities data deck, starting with energies. Brent crude is up 0.63% to $66.85 per barrel, while the UXWTI gained 0.56%. Natural gas bucked the trend, down 0.88% to $3.04. And ROBOB gasoline rose 0.31% to $2.08 per gallon. That's as of 13:00 GMT. Finally, in Melters market, gold is leading the pack, up 0.97%, while copper advanced 0.89%. Platinum slipped 1.19% to $1,338.10. And aluminium was barely changed, up 0.09%, all as of 13:03 GMT. That's your market check for Friday, August 8th. I'm Grace Agbaragu. Over to you, Melissa.
Thank you very much, Grace, for taking us through the markets. And that is your Friday edition of the show. From all of us here at the FMDQ studios, we say thank you very much for watching, and we hope you do have a great weekend.